Today, we're talking all things Payday Super, what it means for employers and anyone responsible for paying super and wages. We'll break down why it matters and walk through the 5 key changes employees need to understand, including changes to how and when super is paid, how it's calculated and reported, and the system and process changes businesses need to be aware of so you can start preparing your workplace now. I'm Alec McNeil, and I'm joined today by Katie Pittman, who works closely with employers and partners, supporting them through change and helping improve the overall experience of managing super for their business. Katie, let's start with a really simple question. What is Payday Super?
So, Payday Super starts on the 1st of July 2026, and it's the alignment of super with wages and salary. So no more super being paid quarterly, it will be aligned to the payday cycle.
Why is Payday Super being introduced?
Now, we know that the majority of employers are doing the right thing. However, Payday Super addresses the unpaid and underpaid issue of employees not receiving their super. So by aligning super with wages, it gives everyone greater visibility of the super entitlements being paid. So when you check your super balance, you're able to see those contributions come in more frequently rather than just 4 times a year. Now, most super funds have apps as well, and so employees have their balances and their contributions at their fingertips. So it's going to help them connect greater with their super. And then also more frequent reporting through single touch payroll will ensure that the ATO gets greater visibility of super being paid on time and for the correct amount.
Katie, that sounds like a really big change. I have a lot of friends and family who own and run their own small businesses. Will they be expected to pay superannuation on the payday?
Under Payday Super, the payment must be received within 7 business days of that payday. So that's business days as well. So keep in mind that doesn't include a Saturday or a Sunday or a public holiday for the whole state. So if it's Geelong Cup, doesn't count, but Melbourne Cup does count. So you need to make sure that all of your super systems, so your clearinghouse, your payroll system, your banking timeframes, all line up to allow for that to happen.
Can you just give an example of what that would look like?
So say you pay your staff fortnightly on a Friday, that payment of their super needs to be received by the super fund by the Tuesday of the following week.
Are there any exceptions?
There are, Ali. So the most important one is when you're making a payment to an employee for the first time to a super fund or an employee who changes super funds. So in those cases, you'll have up to 20 business days for that payment to be received by the super fund. And that's really just going to allow that first payment to go through smoothly and iron out any issues that might come up. And also in addition, there might be special situations. So it could be things like a natural disaster in which the ATO will make a determination, or it could be that the super fund is no longer compliant and you can't pay into that super fund.
Now we understand what Payday Super is, let's look at some of the other changes. How will super be calculated under Payday Super, and what does this mean for employers?
So the way super will be calculated will be based on something new called qualifying earnings. So now this is a new term that's going to describe the earnings base in which to calculate super under Payday Super. And it's basically an updated, clearer version of ordinary time earnings or OTE. For many employees, QE and OTE were going to look very similar, but qualifying earnings is defined more consistently so that employers know exactly what to include.
What actually goes into qualifying earnings?
So firstly, ordinary time earnings, which is what the current super guarantee is calculated on. Secondly, salary sacrifice. So if you have any employees that sacrifice part of their salary to super, that would qualify as qualifying earnings had they not been sacrificed to superannuation. Thirdly, any commissions paid to employees are part of QE. And lastly, the earnings paid to workers captured under an expanded definition of employee. So that includes independent contractors paid mainly for their labour.
What do employers need to do to ensure they are paying according to these new calculations?
So they need to ensure that their payroll systems are set up to calculate qualifying earnings. So that might mean that any pay codes need to be mapped correctly to report qualifying earnings and calculate that correctly. The other thing is to make sure that their payroll systems are set up so they understand this new definition. And employers also need to factor in the new maximum contributions base change.
What is the new maximum contributions base change?
Now, this is really for high income earners. And what it is it's a base in which you don't have to pay super over a certain amount. So that was a quarterly contribution cap. So you have 4 small buckets throughout the year. Now that's moving to a yearly bucket.
From all of the small business owners that I know, they talk a lot about reporting and admin. I understand that there's going to be some changes to reporting. What do employers need to know about the new ATO reporting?
ATO reporting isn't anything new. However, under Payday, it becomes much more important. So employers will need to report both qualifying earnings and super liability when they're reporting through single touch payroll to the ATO.
And what is single touch payroll?
So single touch payroll, or SDP, is a way that employers report information through to the ATO, so things such as wages and tax. It's a clear way for the ATO to see that things are being paid correctly. And under Payday Super, they'll be able to see super and the wages and be able to reconcile those payments.
Katie, what can employers do right now to get ready for this new way of reporting?
They need to make sure that their payroll systems can capture super liability and qualifying earnings, and they need to be able to report both of those through single touch payroll. They also need to make sure that their payroll processes are accurate so that each pay cycle is correct, and then make sure that everything is reported correctly through single touch payroll.
The next big change is about penalties. What's changing?
Yes, so there is the super guarantee charge, and that's a penalty when employers don't pay on time or the correct amount. It's basically the ATO's way of ensuring that employees are getting their super entitlements.
So what makes up the super guarantee charge?
So Ali, it's made of 4 parts, and the first part is the SG shortfall. So that's the amount of super that was incorrect or not paid to the super fund. The second part is notional earnings. Now that's an interest that's applied to the SG shortfall. The third is the administrative uplift. Now, this one is determined based on previous behaviour. So for repeat offences, there'll be a higher penalty. So it could be 25 to 50%. Now, the ATO has mentioned they may show leniency when there's a voluntary disclosure. So if you notice something's gone wrong, it's best to let the ATO know. And the fourth change being the choice loadings. So that's where you don't pay to the employee's choice of fund.
So, Katie, it sounds like there's a lot that employers need to be across with this change, in addition to all the other things that they are keeping on top of every single day. Just talking about penalties, is there going to be any leniency the ATO gives to employers?
It's a really common question we're getting, Ali. And the ATO has confirmed that they're going to take a practical compliance approach in that first year of Payday Super. So really for employers that are making genuine efforts to comply, that might be fixing errors quickly or letting the ATO know if something goes wrong, that they may take a more lighter or educational approach to those employers. However, it's not a free pass. So if employers are repeatedly not paying or underpaying their employees, the super guarantee charge may apply.
Katie, it sounds like under Payday Super, there's going to be less wriggle room for businesses if they do something wrong or they make an error.
Yes, that's right, Ali. So employers need to be really clear on how super is calculated and paid, because under Payday Super, even small errors can trigger that super guarantee charge.
Let's talk systems. What's changing?
Yes, Ali. So there's 3 big changes coming to systems. So the first being the closure of the ATO Small Business Super Clearinghouse. So that's a big change for employers. The second being the greater use of the new payments platforms. That means faster payments for employers. And lastly, it's about SuperStream upgrades. So that's really trying to reduce the risk of any rejections coming through.
So let's start with the closure of the ATO's Small Business Super Clearinghouse. What does this mean for employers?
So from the 1st of July 2026, the ATO will be shutting their Small Business Super Clearinghouse. So for any employers using that, they'll need to find a new solution.
And Australian Super offers a free clearinghouse solution that they can move to. Tell us more.
Yes, the employer portal includes a free clearinghouse that's Payday Super ready. So it supports timely, high-volume super payments. There are automated alerts and real-time data checks. So that's going to help employers manage their obligations. And employers will also get access to an online employee onboarding and security features as well. And it's all been designed with changes like Payday Super in mind.
The other big system change is around payment speed. Can you tell us about the new payments platform and how it will support faster payments?
So the new payments platform is Australia's real-time payment system. So it allows money to move between bank accounts almost instantly. So you might have used Osco or PayID before. And the new payments platform is just an additional way for you to be able to pay super.
Let's talk SuperStream. What actually is it and what's changing in the background for employers?
Now, SuperStream's actually been around for quite a while, and it's the standard way that payroll systems, clearinghouses, and super funds exchange super payment information and member information. So what's changing now is there's going to be some upgrades designed to reduce errors and help payments flow more smoothly under Payday Super. Hopefully, in practice, employers are going to see a couple of improvements. Firstly, there's the member verification requests. So this is going to help employers check employees' super fund and their member details before that super is paid, which will hopefully reduce any rejected or delayed contributions. And there's also going to be clearer error messages. So if something's wrong, there'll be more standardized and specific messages, making it hopefully quicker, clearer, and easier to fix those issues.
I like those words, quicker, clearer, and easier. Sounds like good news for employers. How will they benefit from all of these system changes?
So they're going to reduce delays in contributions reaching the super funds, and they're going to lower those rejection rates caused by incorrect details. And they're going to make it easier for employers to meet that 7-day requirement. And overall, they're going to hopefully make payroll run more smoothly under these new Payday Super rules.
Can we quickly recap the 5 changes we've talked about today?
Yes, so Ali, employers need to be across, firstly, paying super on payday. It's no longer quarterly. This will start on the 1st of July. Second, using that qualifying earnings to calculate super. The third being reporting those qualifying earnings and super liability through single touch payroll reporting. That fourth one is those super guarantee charges and penalties. And last one, those system changes. So that's including the closure of that small business super clearinghouse, the new payments platform for faster payments, and SuperStream upgrades.
What do these changes mean to everyday payroll?
So Ali, every pay run matters and super needs to be accurate for each cycle. So there's fewer buffers and fix-ups later on. There's more reliance on your payroll systems and your clearinghouses and that data quality. And there's clearer reporting through single touch payroll, and that means more ATO visibility.
1st of July is just around the corner. What should employers consider doing right now?
So clean up data, reviewing your payroll settings, work through internal awareness around your business, and test processes ahead of 1st of July 2026.
We've covered a lot today, and there's certainly so much to take in. So where can employers go if they've got more questions and need some more help and support?
So if you're an Australian super employer, you can have access to extra support through our dedicated employer contact centre and specialist payment support team who'll be able to help with things such as payroll changes, super payments, any clearinghouse questions, and more complex issues as Payday Super approaches. And if you need a clearinghouse that'll be ready for Payday Super, the employer portal is available at no cost.
It sounds like employers don't have to navigate this on their own. What's the one thing you would say to employers as they get ready for Payday Super?
I would say start now. So those employers who begin testing, reviewing and updating now are the ones that are going to have the smoothest transition once Payday Super is up and running. And if you need any help, Australian Super is here to help you pay super with confidence.
A really important message for employers. Thanks for joining us today.
Thanks so much for having me, Ali.